All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, June 20th, 2022. If you like the content, give the video a thumbs up, subscribe to the channel, leave a comment, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, hope everybody had a great extended weekend. I know I took a little bit of time off here from the charts. Ready, rested, recharged, and ready to get back at it here. So we got a little bit of movement here. Going to come at you with a crypto update, and we'll cover the NQ and the ES as well. But previously, to get right into it here, previously I mentioned a few weeks ago, let's flip over here to Bitcoin. We're going to talk about crypto primarily, but previously a few weeks ago, actually more like a month ago. In fact, let's actually roll the tape back a little bit more. So for a while, we've been following this kind of positive correlation with Bitcoin and mainly the NASDAQ, but also the ES as well. And we were pretty successful in kind of picking out, like, you know, if Bitcoin was up big, it was kind of a leading indicator for the NASDAQ, as Bitcoin is, you know, trading very risk on. And, you know, we'd say, oh, Bitcoin's up big, and then the NASDAQ would be up big the next day, or vice versa. Bitcoin is down, it would kind of be a leading indicator, and we were using that. And once we had this, the meltdown here with Terra Luna, you know, I was talking about like how the correlation kind of broke down a little bit. However, you know, it may be to the point now where we're not ready to put that to bed, because it's starting to look like that correlation is still on. It's just the fact that crypto is very weak. So the correlation's still intact. You know, the Bitcoin is still a very highly correlated asset to the NASDAQ and to risk on. But Bitcoin is just very weak, and it's when the NASDAQ rallies, Bitcoin's not rallying as much, and so on and so forth, as opposed to what it was a few months ago. But it still appears to be a positive correlation. And what I really want to say here is that, obviously there's been bad news, and it's very weak because of that. And so it appears that the correlation was broken down. We had news almost every day now that, you know, we had Celsius and from Terra Luna. It's like every day there's liquidations and all these crypto desks, so on and so forth. And that's really putting pressure on any crypto related asset. And so it appears that that correlation is broken down, but it really doesn't appear that way necessarily. It's just that crypto was a kind of a leading indicator, and now it's a little bit more of a laggard, although it can be leading sometimes. And I'm going to show you a little bit kind of into my thought process here. So, you know, I've been suggesting that the NQ, the NASDAQ, and the S&P would bottom for some type of a summer rally this week specifically. So I kind of threw that out there last week and said, you know, actually the week before, and I said, hey, you know, if we get a pop off the FOMC and we roll over and we get sold, that will probably mark some type of a near-term capitulation, near-term low for a summer rally. Now, we're not looking for new all-time highs with the summer rally, but we're looking for a good relief rally where things kind of quiet down and just, you know, back off for a little bit. We don't have these 2-3% moves every day. Maybe we'll have a rip your face off rally where you get those types of moves, but we're not looking for this type of just unrelenting kind of one-sided selling. You know, we'll have a little bit of a quiet down period, and I think crypto may be kind of confirming that. So let me explain here. So if we look at Bitcoin, called for 20,000 a long time ago, and that came to fruition. We had the head and shoulder pattern breakdown, and we had an even bigger head and shoulder pattern here, which the target on that's actually negative, so we're not even going to pay attention to that. But this is the one I was really going off of. So basically 70,000 all the way down to about 43,000. You know, so you got about you know, almost 30,000 points there, but 27,000 points. Here's your breakdown. You know, 46,000 minus 27,000 is 20,000. And that would also be back testing the breakout of the 2017 highs, which we never back tested. So I said, you know, when I saw this pattern break, I said, you know, Bitcoin's going to 20,000. And a lot of people said that's impossible. It's not going to happen. It's going to 100,000. It's going to 500,000. I said, you know, okay, fine. But it's going down there. And we're here. But what we did over the weekend in a lower liquidity, you know, weekend trading session, holiday trading session, we broke through that 20,000 area. I thought they had a good chance of bottoming right here, at least in the near term. We had a nice little volume spike with a nice bottoming tail, and you held, you know, the lows of this candle here, and you closed back above it. So I said, you know, Bitcoin's got a good chance to rally here. And then it rolled over, and we broke through 20,000. And I didn't think we were going to go to 18. I knew we were going to go to 18 eventually, but I didn't think we would get there this quickly. And kind of my thought process over the weekend is I just think about this, you know, logically, how many stops got taken out through that? A lot. I've read a lot of reports about tons of traders getting liquidated here over the weekend. Lots of crypto positions getting liquidated over the weekend. And then we got a nice rally here yesterday. And then kind of a little hammer candle inside day today for Monday. Now we got the futures open for tomorrow, which is Tuesday. So we're just inside of that. But I actually think Bitcoin's kind of attractive here. So I think we have kind of a near-term kind of capitulation moment, not long-term, but near-term capitulation for a good rally. Another thing is that if you look at Ether, and we'll just show you the level here, you got to go back a while, long way to get to this one. But it basically takes you back to that 2018 area, right around 850. So you got that pivot high. Let me just try to zoom in for everybody here. So here's your pivot high, you broke above that, broke back down. Then this is basically your back test of the breakdown. You know, you kind of kissed it there. It's not exact, you know, but you basically got there, you kissed it. And then for years, you know, we just kind of traded under it, then we broke out. And again, just like Bitcoin, we never back tested it. And so now we just got there, basically kissed it here, and we're bouncing off of that. So again, Ether is up from the lows of 880. Currently where it trades is up 28%. Bitcoin is only up about 16% from the lows. So I'm seeing Ether outperform Bitcoin off the lows. Generally a good sign when you see, you know, kind of the second performer, the altcoin essentially outperform, as it is a sign of more risk flowing into the market. The problem is it's not confirmed by the altcoins. So you see Doge is barely off the lows here. Polkadot, again, barely off the lows. It's just kind of clinging onto this blue trend line here. Litecoin, again, Litecoin a little bit better here. You know, it's holding up a little bit more off the lows, but still not significantly. Same thing with XRP, Solana. You know, again, you can see that it's more of a dead cat bounce or a bear flag. You know, and if you break through this, you're going to go back down to, you know, 20 bucks. Cardano, again, this all looks like inside bar bearish chop on a weekly basis. So if this yellow line breaks, you're going down to 15. But, you know, so the altcoins are not performing as well. But in the short term, you know, I see Ether outperforming a little bit. I like that. And I like the fact that you most likely took out a ton of stops. Everybody had their stop below 20,000 and they got wiped out. And we got a nice reversal yesterday and a little inside hammer today. So nothing terrible here. I actually think Bitcoin's okay right now. And I think it's more attractive on the long side. What I'm going to look at here next is, so some of these Bitcoin equities, Marathon. Again, a little bit on the weaker side. So that's a little bit of a negative. You can see, again, it's barely off the lows now. We haven't opened up today, so it's, you know, I don't know where the futures are going to open with this. I know the futures are up on the NASDAQ, but again, not a really significant bounce off the lows. Riot, same kind of thing, a little bit of a weaker bounce, you know, looks more like a bear flag. You've got some level. You break this level here, there's a lot of levels down here that are, you know, $1, $1.75, $1.50. The strongest one I see out of the Bitcoin related equities is MSTR. That's like at least the best performing one here. But again, you know, if that 130 handle goes, it's down to 123 and 110 very quickly. That said, if Bitcoin does bottom here, at least short term, you know, I mean, there's downside maybe to 16, but I like that reversal here. And I think the downside right now is limited. Even if it does come down here and retest 16, I don't see it getting much through that, at least in the short term. Maybe it goes down to 12. I mean, I ultimately think it does go down to 12, but given how oversold it is right now, and the fact that a lot of people probably got stopped out here over the weekend, I got to think that they're probably going to take this back up. Now, let me confirm this here, and I'm going to show you. Let's flip over to Thinkorswim. I'm going to show you the NQ. So the NQ futures are up nicely, up over about 1.2%. Let's just take an intraday look. So, you know, we opened up here yesterday and we're just kind of steadily grinding higher. Nothing crazy. ES here. So up modestly, up 1.14, just about the same as the NASDAQ. So nice little candle here, and I like that you kind of tested the lows too. But what I've been showing you guys here on the weekly triple Qs, So again, you have this diverging low, kind of lower low trend line. Again, this will eventually play out to the upside. But more importantly, if we look on the weekly, getting very close to that weekly 200 and this pivot low going back to September 2020. It's also, well, we also ended that 50% fib last week, but if you look at the spiders, basically the same thing. So very close to that 200-week MA. And then look at this support zone right here, previous all-time high. This was the Pfizer gap right here. So right there, if that gap gets filled, that would be very interesting to me. And also, you got a 50% fib that coincides with that 200-week moving average. All right, so there's a lot of areas here. And then if we look even at the Russell, look at the IWM, we filled a major gap here. We filled the Pfizer gap on the Russell, the IWM last week. So a lot of levels coming in here, coming into play here. And I got to think that the attractiveness to me right now is on the upside. I just think there's more risk there. And going into the summer months, summer doldrums, you know, unless we get some crazy news, which is totally possible. I mean, this market has surprised us. I mean, I was calling for declines into June. At the beginning of the year, I said the first 2 quarters are going to be under a lot of pressure, and we'll probably bottom out in late June, early July. And now I'm calling for a bottom in late June, early July. And I'm calling for a summer rally. So that's kind of what we're looking for here. And that goes for crypto, that goes for the equity markets as well. And I just think that, you know, unless we get crazy news, a lot of this stuff is priced in, and there's got to be some relief at some point. It's just been too one-sided here. I mean, we got the big, you know, we had this kind of, you know, sell-off here, little fake rally, sell-off, fake rally. They're selling the 20 moving average the whole way down. And it was just very, you know, very one-sided. And then now we got this big gap down. A lot of the time when you see those big gap downs after the market is already down a lot, usually marks a low. That doesn't mean, now I'll put it this way, here's the other side of that. The other side of the coin is, and I don't think this happens, but the other side of the coin is, here's the Russell. You broke this trend line here, and if you confirm below this trend line, we could have a crash scenario. The same thing with the spiders here. You know, we kind of broke this trend line here on a monthly basis. If that holds, you could have a crash scenario. I don't think, I've had nothing penciled in for a crash at this stage of the game. I've had nothing penciled in for a crash this year specifically. But I wouldn't rule it out, because this market has surprised me. You know, this market has been very surprising all year long. And again, I was calling for lots of declines into June, into possibly July this year. But even then, like the manner in which it has declined has surprised me to a degree. So bear that in mind. So that's the other side of the coin. But I think more so than not, there's a very high chance that we probably bottom out this week, if not this week, next week. And we get some type of summer relief rally that lasts into probably the end of August. That's essentially what I'm looking for. I think equities right now and crypto are very attractive at these levels. I mean, we're talking about, you know, crypto here. If we flip back over to Bitcoin, it's back testing that 20,000 handle. You know, like it never back tested that. You got to think there's institutional support there. And if it gets through that, I mean, yeah, 12,000 would be your next logical level, which is a long way away. I mean, that's almost 50% away. But I think risk reward, you know, if you inch into a position here with a small position and you average in, like, I don't think you're going to get, I think it's going to reward you if you average in and make your last add in at about 12,000. So I just think the risk right now is to the upside. We had OPEX last week. They slammed it down into OPEX. There was a report I read from Zero Hedge that, I'm probably going to butcher it, but it was essentially the equivalent of, you know, like record amount of institutional shorting for the last week. And I know I've been watching iborrowdesk.com. There was very few shares to borrow to short the spider and the QQQ last week, especially Thursday and Friday. I think a lot of that was OPEX related. And once that gamma unwinds, it can cause, you know, a pretty good short squeeze. I think we're due for that. And when I say we're due for that, I don't think, you know, we had a nice short squeeze. I mean, this move right here was 10%, a little over 10%, I think, on the spiders. But we're due for a sustained rally. I mean, this one here was a monster short rally. I mean, it was an epic one, but it didn't last more than a couple weeks. I think we're due for one that lasts at least maybe 2 months. And by that, I don't mean that we're going to go straight up for 2 months. I mean, we're going to have a nice counter trend rally here. Maybe we can get above this pivot potentially, but I wouldn't, you know, I'm not looking for anything crazy here. I think basically this is the pivot you're working off of as far as retraces are concerned. So it's possible we get up to 420, 430 maybe, maybe a little bit past that potentially. You'd have to work the numbers out, but we're not looking for anything crazy. We're looking for a good relief rally where things quiet down and maybe volatility backs off for a little while. Anyways, guys, I'm gonna wrap it up here. Come find me on carnivoretrades.com. We're having a killer year, beating the market by 30%. Yes, 30% this year. So if you want to get in on that, come find me there. Free trial, 2 weeks. After that, $15 a month. It's basically the same as an Amazon Prime membership. And guess what? I'm making you money, unlike Jeff Bezos. Anyways, guys, take care. I'll see you guys all tomorrow.